Welcome to the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. We are also 2/3 of the team at unfilteredinvestor.com. And the most important part of the team is our chief technical strategist, Mike Arnold. So please join us there. We take a lot of the topics we talk about at Tradier and go deeper at unfilteredinvestor.com. Bobby, so oil, a relatively sane and straight day today. What is everything over, or what do you think?
Well, I made the bold prediction, the brave and unbelievably unpopular prediction that the high is in. And that's very scary to say when we're like 30% off the high. It's very challenging.
Exactly. I was about to say, that's real
amazing
bold.
Market courage by me. No, I think the high is in.
Was that a panic buying or was it a panic short squeeze?
I think it's a mix of both. It reminds me of what happened with the Ukraine war, with Russia, Ukraine, where we shot up and then we slowly trickled down from there. It's a little bit different because the Strait of Hormuz represents direct oil supply. But I think it's one of two things. I think when you're looking at it being sustained in the price range it is now, which I'm going to call 80 to 95, that's bad. Okay. Yeah. But it's not catastrophic. We've had that range before.
Yeah.
Mike McGlone, who you know, and maybe our guest knows too, he's calling for $57 in the very near future. Regardless of whether the shooting starts, he thinks the U.S. will be able to control the strait, even if the whole thing isn't over. I think Trump doesn't want this thing to go on. It's just a matter of whether he can control the strait. Now, having said that, if this is a blip, it's not going to be a sustained inflationary shock to me. It's not.
That's what I believe as well.
And I think they'll start to creep those rate cuts back in. But, that's my prediction at this point.
So at this point in time, I always say the same thing. I'm going to say it again. You've maybe been watching Bob and I for 25 years and think that we're mostly full shit. And I will say this, we oftentimes think we're full shit and we talk anyway. But the one thing you cannot deny is for some odd reason, we get the absolute best guests. Today's guest is no exception to that. One of our favorite guys, one of the smartest guys. But I'm going to get ahead of something really quick. If he claims that a month ago we had dinner together and I dumped a whole glass of wine in his lap, he's a liar. He was drunk. He doesn't even remember what happens. Let's bring on Brent Johnson of Santiago Capital. What say you? What say you, Brent?
Did you really spill a whole glass of wine on him?
Yes, I really did. He didn't. Well, he took it like a champ, though. You didn't get crazy.
I mean, what can you do? You're 50 miles away from your hotel room, and you just got to deal with it.
Okay. First of all, we have a couple topics before we hit markets. First, we're going to do restaurant review. You ate at my restaurant. What are your honest thoughts of my restaurant?
Honestly, those cheese curls or puffs or whatever the hell they're called, those were amazing. I mean, I ate and the fried pickles. I mean, I would make the trip there alone for those. And the burger was excellent. So the wine wasn't fantastic, but the burger was excellent.
Well, the wine didn't wear well. Is that what you're saying, Brent?
The wine as it flew through the air, I thought was quite beautiful. The light hit it.
I had to filter the wine through my jeans, so it took out some of the flavor, I guess.
Which, by the way, and for those watching, you know that I fancy myself who's always cool. And that was just such a moment of not cool to me. And I will remember it always. The last thing I'll say before markets too is this the best Nebraska team you've seen in your lifetime? And do you really think they could go deep? And who comes out of the Big Ten if not Nebraska?
So the interesting thing is when I was a freshman in college and I was at Kansas, the Nebraska team was very good. They kind of came out of nowhere. And I think they got a second or third seed in the NCAA tournament. So it's a pretty similar record to this year's. So I think, what happens in the NCAA tournament will determine which is the best Nebraska team ever. I think this team is probably better. I think they'll win at least one, if not a couple games in the NCAA tournament. But, I have to say, your team at Illinois is kind of a sleeper. Brad Stevens, or what's his name? Brad Underwood. I think he's a very underrated coach.
Yeah,
and I think they've got a good team.
When they're hitting their threes, they're just unguardable. When they're hitting their threes, it means they're moving the ball very well. And when they do that, I think they're a sleeper team. But that Michigan team is so stacked too. Yeah, we played them, and we were not in the same league, but we were cold as shit too. So we'll see how it goes. Bobby?
Yeah, I got no interest in college basketball.
Okay. What, do you have any market questions? You want to just call it? Is it
No,
over?
I do have a market question. It's funny. This particular appearance by Brent, which is long overdue, came from me tweeting back at him when he had posted something. Now I'm going to paraphrase it because I don't have it in front of me, Brent. Something like, okay, which low IQ people do I have to explain that the U.S. isn't doing so but poorly or as poorly as they think? First of all, correct me as close as you remember to the quote. So I remember seeing this. And I'm like, oh, we got to get him on to talk about this.
I meant to go back and look it up before I came on because I don't remember what it, but that does sound like something I would say.
I'm going to look it up
now. No, I mean, listen, my guess is that I was responding to another latest, American fatalist who says, this is the time the United States really is going to fail, even though every prediction every day for the last 60 years hasn't quite happened. And and I say it kind of facetiously because listen, there's a lot of problems, right? And the one currently going on in the Middle East is not nothing. That's a big problem. But when you look at the board and you try to look at it as a relative game, if you're going, we talked about basketball. If you're a basketball coach and you walk into the gym and you get to pick 5 players, which 5 are you going to pick before you pick the United States? It's pretty hard to pick somebody over the United States. It doesn't mean this player's in good shape. It doesn't mean he's what he used to be. It doesn't mean he's not going to trip over his, untied shoelaces once in a while, but he's still a decent player. And I think too many people think that he's retired and over the hill and can no longer contribute. And that's kind of where my interaction on Twitter comes from.
So you
putting it up right now, Jimmy.
What's that?
I'm putting it up right now.
Good. Okay, good. Because
Luis, can you throw that up on the screen, please?
In real life, I think you're one of the nicest guys, but on Twitter, people just irritate sometimes, and sometimes you have to come after them. It's like scratching an itch in some way, wouldn't you say?
So I suppose it's that time of the day to check in with the usual suspects so that I'm up to date on all the latest ways in which the U.S. is failing again. You can see his first reply was me saying, can you come on the show and talk about this?
Yeah.
Listen, I think anybody who's ever met me in person knows that a lot of times when I throw my jabs and make my little sarcastic comments that I'm doing it with a smile on my face, and it's for the most part good natured. Now, there's no question that sometimes it gets a little more intense than others. But at the end of the day, everything, I grew up playing basketball and I was an athlete, and it was just always just part of the game. Yeah. And after, you'd play really hard and you'd compete really hard. And afterwards you'd sit down and laugh with the guy that you were talking trash to the whole time. So it's never really anything too personal, although there's a few people that I like to mix it up with more than others, I guess.
You know what gets me about basketball right now? And part of the reason I have no interest in it. Did you see, I forgot his name already, Bam something or other, 83 points.
Yeah, I did.
In the NBA. Did you watch any of that?
It did. It was a clown show.
So I watched it was a clown show. I watched a YouTube recap of it that took about 17, 18 minutes. There was one of his teammates had a free throw. They were up by 11, fair enough. But it was like in the third quarter, he slammed it against the backboard, trying to get him a rebound for a putback for another point. Yeah. It was literally like the NBA All-Star game. They were trying to get this guy above Kobe. And his shooting percentage on this particular night was like 47%. When Wilt did it, not fair, I get it, it was 65%. When Kobe hit 81, he's somewhere in the range of like 58 or 60% shooting. Yeah, it's like this current game is, I don't like it. Anyway, sorry.
Can we talk about oil more or no? Yeah. I want to talk about oil. Is oil in any way tradable? We talked about that 119 high. Bobby made a joke about how he said the high's in. Yeah, the high is like 30% higher than where we are right now. Yeah. To me, that seemed like a panic short squeeze. What do you think oil's even tradable right now, or do we need just another 2 weeks of data?
Well, I also think the high is in. I tweeted something the other night. So I was at a conference a couple of weeks ago where Doomberg, he literally said, listen, in the next couple of weeks, oil's, there's going to be a war. Oil is going to spike. Don't try to get in front of it. Just wait for it to spike and then sell it. And so Sunday night when it was at 1:15 or whatever it was, I just kind of tweeted and said, anybody who was at that conference, you know what to do. But it's impossible to actually do it, right? Because if you sell futures and you wake up the next morning and oil's at 180, you're carried out, right?
Exactly, right.
And the VIX was at 35, so you try to buy puts on it, and they're, you're paying $5 for a put that's, $30 out of the money. So it's really, really hard to trade it. So I think in those kinds of situations, you just kind of avoid it and you wait for cooler heads to prevail. Now, for anybody who shorted futures massively on Sunday night, I give them all the credit in the world, because that's not easy to do.
You have to have deep pockets to do that shit. So,
Yeah.
Bobby, at unfilteredinvestor.com, and myself specifically, I gave a speech on it about 2.5 months ago. Oil was my pick to click for 2026. That's where I wanted to be. But the reason was, and I think we talked about that we were at dinner, the reason had nothing, well, it had very little to do with massive disruption in the Middle East. What it had to do with, I thought, a domestic economy that was resilient, an asset that had the shit beaten out of it for 3 years, despite the fact that the dollar's getting devalued massively in that time, and oil's still going lower. I assume there's going to be a ton of shorts in it. And as soon as it started to get a little bit of a click, we'd see short covering. Do you think my thesis of a resilient U.S. economy being a tailwind for oil is still intact? Or does the way high price of oil now start to be a headwind for the economy, and the two things can't exist together?
Well, I think it depends on how long it stays up here. I think if oil stays at this level and starts to trend down, then I think you're absolutely right. That you can have a tailwind to oil because the economy is strong. And I have no doubt that Besant and Trump and all these guys are going to try to do everything they can to goose the economy into the second half of the year as we go into the elections. But it doesn't take a genius to realize that if oil stays above $100 for too long, all bets are off, right? It's one. I don't know if there's anything in the world that is more inflationary when it goes up and more deflationary when it falls. But if it goes up too much, it actually becomes deflationary because it just crushes
my
everything,
point for
right?
years. Been my point for
so
years.
there's a band within which it has to trade. And I don't know if you've seen this show called Landman that takes place.
We love Landman. We talk about it all the time. Yeah.
So there's a scene in there where Billy Bob Thornton explains why oil has to stay between like $65 and $80 or whatever that band is. And he says it gets much below that, then the wells shut down and supply gets constrained. And if it goes higher than that, you pay for it at the pump and the economy starts to slow. And it's kind of an off the cuff remark, but it's actually very true.
I have a quick question about Landman too, and I want to stay on topic because I love that topic too. And this is objectively speaking. Have you ever seen a show that had 4 more beautiful women in order than that show had? And I'm not even joking.
I mean, that show is exactly what you expect it to be, right? I mean, they don't pretend at all. And they even had I don't know if you saw the one where they were even talking about The View. Billy Bob Thornton is explaining to his dad the show The View, and he's like, it's hilarious. He says they don't know it's hilarious, but it's hilarious. So yeah.
Here's the reason that I always push back a little bit on rising gas prices specifically, or rising crude oil prices ending up inflationary at any point. I think prior to them being deflationary, prior to them being deflationary, the recessionary waves start coming first, because it's somewhat inelastic, right? It's not like when steak goes up, you buy chicken. When gas goes up, you buy gas. And it does take away from discretionary spending for a lot of people. But at that point, it's more about a slowing economy than it is about pricing coming down. Because I remember in our family business, we had like 18 delivery trucks. There was no way to hide that cost increase. We just had to pass it on. Didn't matter if the demand went down. We couldn't deliver the product without paying that extra price for the gas. That's just a small anecdote, and that's where this comes from for me. Now, obviously, we get a recession. A recession in and of itself is deflationary. But that's not actually, I'd love for you to comment on that. But the question I really want to ask you is, at what point, or I should say, after how many weeks, does the Fed start saying, okay, we don't look at energy, we look at X fuel and energy, right? They're going to comment on the crude price, but yet they look at X food and energy. How long does crude have to stay up, or enter any energy product, whether it's electricity, natural gas, to actually bleed into core inflation?
Well, that's a good question. To be honest, I don't have an answer right off the top of my head, but I don't think it stays at these levels for more than 2 or 3 weeks before the powers that be start trying to bring it down through various efforts. I don't think it takes all that long, and not necessarily for the U.S. I actually think the U.S. is better situated for the closure of the strait than any other country in the world, perhaps other than Russia. But they're certainly better than prepared for it, for better than every country in Asia. And so that the slowdown in Asia and the rest of the world could end up, kind of dominoing back onto the U.S. economy. And I think that's where the pressure to get the price under control would come quicker than the pressure internally.
Okay, so my follow-up to that. This morning I was at the gym with my wife, and she listens to music and I listen to Bloomberg, right, in my headset.
Yeah.
And at one point I just threw the phone across the gym, and she's like, "What the hell is wrong with you?" Bloomberg was trying to will this into market chaos and into a longer conflict, and it may end up being a longer
Media loves
conflict.
that. Yeah.
But they were just saying that, like, they're going to release 400 million. That's unprecedented. That must mean that they know that it's going to be a longer conflict. In my mind, when I heard 400 million barrels, which is a large release from the IEA, right, from the multiple strategic petroleum reserves in Europe, I thought of it similar to the Bank of Japan. The Bank of Japan learned their lessons in the late 80s and the early 90s that they should not try and manipulate their currency against the flow of the market. Remember, they would try and buy downdrafts and it would just go up a little bit and then collapse again. So finally they got it straight and they said, okay, we only intervene when it's based or is on the way up from a low. I think that's why this particular release came now and why the US hasn't released yet, because they want to wait till it eases a little bit and then they're going to dump on the market. Do you both, this is for both of you, is that stupid? I was so pissed off today.
I mean, I don't think it's stupid, but I think you have to be prepared for them to do stuff like that. And if you, to be honest,
Bloomberg or the IEA?
No, like, the fact that I think it's stupid that Bloomberg is trying to turn it into something that listen, it could be, but to your point, Jim, they almost want it to be, right? But I do think that governments, not just the U.S. government, but all government, they are going to interfere in markets. And so when I see people make comments that, oh, this shouldn't be happening, the government shouldn't be doing this, I'm kind of like, are you serious? Like, get over it. Like, they're going to. Like, if you don't like it, don't get into the game, right?
Yeah.
Doesn't mean I approve of it. It doesn't mean I think it should happen, but it is a fact of life, and they are a player in the market, whether we like it or not. Governments are players in the market.
So, by the way, it seems like we're talking about something shrouded here, because you're talking about releasing that. I'm talking about Scott Bessent going, I'll sell you all you want at 118 in the futures markets. Potentially, what are the chances?
Oh, I think they've probably already done that.
Okay, that's what I think too. Okay, good. I put it at 70% that they were selling futures on that big spike. Yeah, Bobby, you think so too, right?
Yeah, I think so too. I think for sure. I mean, again,
they buy corporates. They buy, they do all kinds of stuff already. They're already involved in markets, so it's not that big a leap.
No, I guess this is my point, right? This is my point. I don't like that they're in there, but they're in there, and they're not leaving. As much as I want them to leave, they're not.
We can complain about it all we want, and they're not.
I think that it's a situation where I think they believe they're going to get done what they want to get done, but we don't know, right? I mean, we have no idea. To your point, Brent, which is why I wouldn't even trade crude oil right now.
By the way, I know that
one thing I would say, though, is
a new refinery is being built. By the way, Remo just came up on the screen. Thanks for that. Yeah, a new nuclear plant and a new refinery is being built in this country. Praise Jesus. Anyway, you go, Brent. Yeah.
No, I was just going to say, I remember in 2022 where the most obvious trade in the world was to go long energy and natural gas, because Russia was going to constrict the market. There was nothing anybody could do about it. And this was just a new world that we were entering, right? And everybody gave Biden a hard time for selling out of the SPR. Well, you know what? The level that Biden sold out of the SPR is still higher than oil is today, even with this spike. So, and I'm no fan of Biden. And I'm not saying that was a smart decision, but it wasn't the nightmare scenario that everybody thought it was. Now, could it be in the future? It could be, but it could also be fine, right? Just like it was for the last 3 years until now. And so I've just gotten to a point in my life where nothing shocks me anymore. I'm kind of prepared for anything. And when people tell me that something can't happen or will never happen, I just kind of laugh, because, you just don't know, right? You can have all the certainty in the world, but you just don't know what's going to happen.
So here, let's tie up the crude thing, because as like Bobby knows that I've been a huge bull on crude. Now I don't even know if I'm a bull on crude now. The hardest thing in the world is when you get your move and you're like, okay, what the hell do I do now? So what do we do now in crude? I'll actually start with you, Bobby. Is this to just put some of it in the investment account? Do we want to be, or is it tradable in the short term? What do you think, Bobby?
No, I mean, look, if I were to trade it right now, I'd actually trade it to the long side. downside, but I'm not going to trade it right now. You
So
know,
I'm
for
going to just
me,
cover half and put the rest in my.
if you're already long, yeah. I mean, if you're, it do the same thing I did with gold, 2 years ago, is I covered a little bit and now I just hold on to the rest. I've got so much money in the trade. What do I want to do with it? The crude oil is not the same though. Like crude oil is me reverting. And that's because like in Landman, it has to be in that price range, right? Otherwise it's disaster for all economies. They're going to get it back down there. At some point, all of the firepower globally will head to the strait, whatever's left, to get those ships flowing and to keep those prices down, because it's not just a U.S. problem.
So upside, but not much. Brent?
I'm not trading it for all the reasons we've discussed, but if I was trading it, I'd trade it to the downside because I think it is such a big problem. To your point, nobody wants the strait closed. China certainly doesn't want the strait closed. Asia doesn't want the strait closed. The United States doesn't want the strait closed. So I think, if anything, I would be trading it to the downside. But to be clear, I'm not recommending trading it.
We're taking over the strait. It's going to be the Straits of America pretty soon, right?
Yeah.
That's what it seems like.
Yeah.
Okay,
So
let's move on to. You go.
Go
No,
I was just going to say, for those who think this is kind of a pet peeve of mine. So I'll just air it here and then I'll be done with it.
Brent's got a lot of pet peeves, by the way.
No. The people that think that the United States did not realize that oil might spike to $100 if they bombed Iran are fucking delusional.
It's comical,
right?
when you say it out loud. Yes.
Listen, they may be misguided, they may be arrogant, they may be off base, but these are not the people that have risen to be the Joint Chiefs of Staff. These are not stupid people, right? They have the equivalent of 4 or 5 PhDs in the exact topic that you now on Twitter think you know more about than they do. So it's not that they always get it right. It's not that there can't be unintended consequences. It's not that it can't blow up in their face. Maybe it will blow up in their face, but it's not that they didn't realize that energy prices could rise.
I love that.
I'm going to say, I'm going to disagree with you, because basically Anna Navarro, Joy Behar, Whoopi Goldberg, they all told me he has no plan. Sonny Hostin is positive there's no plan. So
I trust Sonny Hostin over Brent Johnson any day. Before we move on to stocks, Luis, can you put the banner up real quick? Take a quick break in the show. This is the point of the show where I ask you guys a favor. Please give a try to Tradier Pro for 3 months for free. We talked to options traders who've been doing it for decades, and some have been doing it for days. They all say the same thing about this platform, that it is absolutely the gold standard and top notch. You get to try it for free for 3 months. Just scan that QR code. Do it as a favor to us. We greatly appreciate it. And now back to the show. I want to talk about stocks. Okay, so
before you go, Jimmy, I just want to throw one more thing up. And
sure.
Brent, I apologize for this, but I think this is something we should start doing. Luis, can you put this up? I'm going to be speaking with Carly Garner, who's been on this show a lot. This is pretty bush league. I have the whole screenshot in there, but this is, I'm going to be in Hollywood, Florida with Carly Garner. Also, Kenny Polcari is going to be there. Mike McGlone, Heather Zumaranga is going to be there. Mike Lee is going to be there. A bunch of other people that we know and have had on the show.
Isn't it a Kenny Polcari venture? And why wasn't Jim Iuorio invited?
No, it's the money show. Carly asked me to speak with her because she knows I can drive there.
It's large, yeah, right.
Okay. It's not. This is not an impressive thing for me. She knows I can drive there.
Okay.
So she invited me.
Okay, good.
I'm just going to start calling you Hollywood.
Exactly. We should, for sure. Brent, let's talk about stocks. Okay. We're in the 4th year of a massive rally, 3 years of average 20% gains in the S&P. Statistically, it's a bad year after that, averages 5 to 6%. It's a midterm year, wild volatility in midterm years. Is this just what we should have expected, volatility? What are your thoughts for this year on stocks, or even now?
I think we probably go sideways into the midterms, to be honest. I think we're going to see volatility both ways, but I don't think we're going to be dramatically higher by the time we get into the fall. And I think we could have pockets of downside, but I also don't think we're going to be in the Great Depression by the time we get to the fall either. Stocks have come a long way from where they were a couple of years ago. But what's interesting to me is that if you kind of just zoom out a little bit, despite the volatility and despite what's happened, the volatility has been much more significant in the credit land than it has in equities. What are equities? 4 or 5% off their high, 6% off their high at the most.
Yeah.
That could happen in a day or two, right? The VIX is at 23, 24. It's not, listen, we've had some volatility, but what's kind of happened is for the last 3, 4, 5 months, equities have kind of gone sideways, right? They've hit the ceiling, they pulled back, hit the ceiling, pull back. It's hard to find something that's going to push, for me, I have not been able to identify anything that I think is going to push through that ceiling that would then allow it to escape, higher. So I think we're probably going to keep hitting our head and pulling back on that probably for the next 6 months.
Can I add something to that real quick? Because I actually will make the argument that there's been somewhat of a broadening and rotation from the AI trade that we had for 3 years. I think it's happened rather seamlessly and elegantly so far. And I put that on the positive side of going forward in stocks. And maybe, and I believe you're right up until the midterms, but I think that that's happened pretty nicely, no?
No, absolutely. This is my point. Like, for all the angst out there, and for all of you look at the put call ratio and the number of people who have hedged their positions. You'd think that stocks were down 20%, but they're not. They're down 5 or 6%.
This is the NASDAQ future. I put this up because obviously the Russell might be a little bit worse, but the NASDAQ future hit 9.9% from its all-time high. Average correction, they happen 1 to 2 times a year. And also I want to point out, I started to draw this, but I didn't finish. We went from this sort of consolidation that Brent was talking about, right, up in here to this one. And this is what made me this one right here. And this is what made me so mad about Bloomberg. Not only that, but we never closed below the 200. This red one's the 200. This is not chaos. Not yet. Could happen. Not there yet.
We've taken some punches, though. I mean,
no. Well, and then there's certain
remember that, right?
Like the software stocks have been down 20-30% too.
Yeah,
so
right.
some of those took it a lot more than others. And one thing I will say, I'm a bit surprised that some of the big stock, like Google's down quite a bit. Microsoft had a big pullback. I'm a bit surprised that those big mega caps pulled back to the level they did, that didn't pull the overall indices down with them to the extent I would have expected.
Yeah, that actually makes good sense to me. What about we hit a little bit about tech. After the pullback in tech, do you see it as a good value here? Do you think we're on the cusp of 2001 where the internet stocks got crushed, and when they were done, all that was left was the actual internet? What do you think about those?
So I do think that there's going to be a handful of, it could be very similar to the .com, right? A lot of these AI companies could end up on the wayside, but I actually am one of the people that think AI is revolutionary. I think it's going to change everything. I don't think it's going away. Part of the reason I don't think it's going away is I think the government itself, all governments are going to throw all kinds of money at it because to me, the AI race and the technology race is part of the bigger, global hegemonic race. Like whoever wins this AI race is probably going to dominate technology and the technological infrastructure for the whole world for the next several decades, if not for the next century. And, I'm not a big fan of Karp, who runs Palantir, but he made a comment a couple weeks ago or a couple months ago where it's a binary race. It's us versus them. And whoever wins, the other one it's not going to be a 2-person race, or it's a 2-person race, but only one is going to win. And I have a hard time disagreeing with him on that. I think it is a race. I think it's a race between the United States and China, and I think it's a race that we have to win.
So my bullish thesis, and I want you to answer this too, Bobby, but Brent first, is that one of my bullish theses was that I think, and I've thought this, not just, it's become in vogue the last month, and I'm going to pat myself in the back because I've thought it for 3 months, that AI was slowing hiring, not just for what it's actually doing for companies, for what companies believe it's going to do. And they might be right or wrong, whatever, but it's slowing hiring. Now, Powell, Cook, Waller have all said, or Walsh have all said the same thing. So here's the scenario is that the Fed is easing to address a labor market that's slowing, but the labor market slowing is not a normal indication of a falling apart economy or aggregate demand falling down. So it's literally, if they're only like 70% sure of why the labor market is slowing, they can't risk it and they have to ease. Ultimately, that's good for equities and risk assets, but after the midterm. Do you like that thesis?
Yeah, I do. I do like that thesis.
Yeah. Bobby?
Yes. I'm with you on that.
Yeah, no, I like that thesis as well.
Oh, by the way, I want to ask about 10 years real quick too. I want to ask you too, Bobby. With the spike in 10-year, was that about how expensive goddamn wars are?
Wait, what did you say? I missed
the
it.
10-year, the spike in 10-year yields. Like first it was all, oil going higher is inflationary. It's like, okay, maybe that's the reason. They thought, no, the market's probably saying that there's a lot of bonds to sell. And if we keep dropping $1 million bombs, there's going to be a lot more bombs to sell. Does that make sense to both of you guys?
Yeah,
totally. Listen, I think the only seller of bonds that really matters is Scott Bessent. I don't think it matters who else sells, but if he sells a lot of them, yields probably go higher.
Yeah, then the buyer's going to be Kevin Warsh. But anyway,
So
Bobby.
another thing that we kind of take for granted here, February 6th was the last time the 10-year was this high, and it was higher than it is now.
Yeah.
So this is what I mean when I'm saying I get so mad at Bloomberg. It's like, okay, so we got our garden variety correction, regardless of what the reason was in the NASDAQ, right? 10 years went back to where they were in early February. It's only mid-March. Like, it's not that big of a move. It is, like, because we've traded 10 years for a long time, so we know it's a big move. But relative to where it's been before, you go to February 4th, we had a 4.29 yield on the 10-year. So, it is a move. And that's why it's like, when I look at the overall market, and there's a question here, Brent, and it's for you, of course, but I want Jimmy to chime in as well. Do you look at this, take the war out of it for a second? There's always going to be something that drives the market into its correction. It doesn't just happen, right? It doesn't just come out of nowhere. You had AMD. Was it AMD I looked at? Yeah, that was AMD. Might have been NVIDIA. Doesn't matter. Same thing. Went from about 126 PE to about 76 now. For where it's been lately, it was NVIDIA, by the way. But for where it's been lately, that's a bargain, right? For the way that it's traded. Do you look at this as kind of like Michael Jordan in a slump for a quarter or two, or do you look at it like Michael Jordan? He's on the Wizards now.
Well, probably more the latter or the former. Like I think that there's going to be a handful of these stocks that are critically important to AI infrastructure and technological infrastructure that are going to still be around 5-10 years from now and are going to be much higher. But I think it's going to be very volatile. And if I had to guess, I would say that between now and the midterms, those will both, the Taiwan Semi and, NVIDIA, some of these other semiconductor stocks are probably going to trade lower before they trade dramatically higher. But I do think that to a certain extent, while those valuations have come down, I hate saying this because I know how it's going to sound, but I don't know that valuations even really matter right now. Now, they will again at some point, but I don't know that they really matter right now. I think flows and the effects of passive management matter much more than a particular multiple of an earnings or earnings.
And global liquidity, which we were watching.
And global liquidity.
Yeah,
exactly.
Bobby?
So I got a question in the comments that I want to throw out before I forget to. It's from our friend Remo. It's stock charts. How's China faring during Venezuela and Iran turmoil? Do you have any insight on that?
Well, I think right now they're faring fine, but will they be 3 years from now or 4 years from now? I mean, what's going on right now between the United States and China is a hostage exchange. And what I mean by that is we have certain things that they want, mostly technology and advanced chips, and they have things that we need, which is rare earths and pharmaceuticals, right? And there's this détente between the United States and China because they need what we have and we need what they have. And we're still exchanging them back and forth. But behind the scenes, each side is working furiously to get independent of the other. And whenever that day arrives, whether it's 2 months from now, 2 years from now, or 10 years from now, once someone arrives at that independent level, all gloves are off. And I think at that point, the U.S. has the ability regardless of who gets to that point first, I think the United States has things that they can use more forcefully against China than China can use against the United States.
That was damn brilliant, by the way. That's going to be our clip, our sound clip to get out. That's good. Let's talk about the dollar now. I did think the dollar was ultimately going to rally against the euro, particularly just because it fundamentally makes no sense. Where are you going to invest? Europe is a museum. China's a prison, and Japan is an old folks home. Where the hell are you going to invest but the United States? I know you've been on this forever. Why was the dollar so weak against the euro, and when and why is it going to turn around?
Well, I think part of the reason was a year ago when we went into the tariff tantrum, the big thesis that comes around literally every year, it's always a different reason, is that now nobody's going to invest in the United States anymore and they're going to all go invest abroad, right? Every year this happens and it's always a different reason, but that was very popular a year ago. And also as a result of the tariffs, and when Trump started to go on a rampage against Powell, and then we knew we were going to get a new Fed chair, the expectation was several rate cuts are coming, right? Trump was fairly new into his administration. He was going to get a Fed chair and they're going to cut rates like crazy. And that combined with the rest of the world no longer wanting to be in the US, I think everybody kind of front run the rate cuts and front ran the idea that everybody's going to pull their money out of the United States. But really the dollar has gone sideways to up a little bit over the last year since that sell-off, right? And I think part of the reason is because, those rate cuts haven't arrived to the same extent that many people thought. And even if they start coming now, the rest of the world is cutting as well, and it's a relative game. And, with Warsh being, the pick, he has been seen as more hawkish than others. Now, I don't necessarily think he's hawkish. A lot of that's based on a speech he gave 10 years ago.
But, I think that's funny, by the way, and I've addressed that several times. He's in cahoots with Trump. There's no way he got the appointment unless he changed his tone from not expanding the balance sheet 10 years ago. But anyway, yeah.
No, exactly. So, I think that's kind of where we're at, and I who knows exactly how it's going to play out. But I think my point has always been with the dollar. The risk is not the dollar going lower. If the dollar goes a lot lower, that means there's plenty of liquidity and the dollar's flowing, credit's being extended. I can live with that world, right? That's a pretty good world. But the risk to me, as somebody who oversees assets, is when the dollar goes higher. That's what causes liquidity problems. That's what causes volatility to rise. That's what causes pressure points to explode. And it can get away to the upside. And, the other point I would make, the reason that the Fed comes in and does QE or does yield curve control or whatever it is because they're trying to weaken the dollar. So if the dollar is so weak that nobody wants it, why the hell does the Fed have to keep coming in and weaken it artificially, right? I mean, so, this idea that, we should talk about gold a little bit too. Gold went to $5,000 and a lot of people said gold would go to 5,000. But I think synonymous with their call for gold going to 5,000 was the DXY or the dollar index to be in the 80s, the 70s, or even the 60s. I don't know too many people that were saying the gold was going to be at $5,000 while the dollar was hanging around 100, right?
Amen.
And so that's kind of where I sit. There's plenty of catalysts out there that could send the dollar higher, especially when you consider the sentiment and the positioning is about as negative on the dollar as it's ever been. Now it's changed a little bit over the last couple of weeks, but as of 2 or 3 weeks ago, the euro longs were close to their all-time high. The positioning and sentiment were against the dollar were as negative as they've ever been. So whenever you get a bunch of people on the one side of the boat and then you get some geopolitical conflict thrown in for good measure, that's always an opportunity for a dollar squeeze higher.
Brent, where do you sit in the performance of gold specifically during this particular time? I had somebody say to me recently that, it's up a lot, so it probably needs to come down. I personally don't think gold needs to come down. And then as a follow-up to that, how do you compare it to Bitcoin's performance during this conflict?
Yeah.
Well, I think to me, Bitcoin, I'll start with Bitcoin. To me, Bitcoin has never been a flight to safety trade. To me, it's a pure play on global liquidity. When there's plenty of liquidity and the debasement trade is off to the races, then I think Bitcoin probably does okay. But when that debasement trade starts to slow down a little bit and the rate cuts aren't forthcoming as quickly as everybody thought, and the dollar doesn't fall out of bed the way everybody thought, then I think that's kind of why Bitcoin pulled back a little bit. I also think the rise of stable coins and the U.S. for the most part endorsing them has taken some flow away from Bitcoin that otherwise would have gone there. Now, as far as gold, I don't think gold has to fall, but I don't think it has to go higher either. Like, to me, it would be great if gold just went sideways, for the next 6 months to a year. I think that would be extremely healthy. Whenever you see a parabolic move, or not a parabolic, but an exponential move like we saw in gold and silver over a 6-month period, you guys have been in the markets long enough. Markets don't go in a straight line, right? Whenever that the right side of the chart's going to look like the left side of the chart at some point, you just don't know when. So we had that parabolic move up. Silver's kind of had a pretty hard pullback. Gold's had a little bit of a pullback. I think if we don't go sideways for a while, then I think it risks a stronger pullback. But I think if gold went to 4,500 and stayed there for 6 months, that would be a pretty good thing.
Bobby.
Yeah, I mean, it's funny. The last let's call it the last 3 corrections in gold since 2023 have been something mine and Jim's partner, Mike Arnold, calls a sideways correction. It's not actually a correction. It's just sort of a rest period. And people forget, gold did drop 21% in like early February, I think it was. Is that right? Somewhere around there?
Yeah.
Dropped down to about 4,400 and then rallied from there. Is that right?
30 in a day. Yeah.
Yeah. So there is sort of this idea that, gold kind of already did what it did. I did
the other thing too, if you don't mind, I apologize to jump over top of you. I want to make a point before I forget it. The thing that's been different about this gold and silver rally too is it hasn't been driven by speculators. If you look at positioning, the speculators weren't like frothing at the mouth to get more of it. And in many ways, the speculators have sold into it, and the commercials have covered their short position. So it's not like there's a really bearish setup on either gold or silver right here either. The price has come a long way, and so from that perspective, you could see a pullback. But I wouldn't look at the structure of the market right now and say, wow, this looks wildly bearish.
Mm-hmm.
Yeah, I got the chart up right now. I know you're talking not different than the chart, but the chart looks great to me in gold. Silver's hasn't been as good since that big day, which I think was the 29th of February when they both got just hammered. January 29th, not February 29th.
Yeah.
Right.
Yeah. So what other topics you want to hit before we go by them, Bobby? We got about 10 minutes.
I want to know what, if you think that the AI sector and what you consider to be the AI sector, many people think it's just chips. Is that what you're looking at? If I had to say, what do you want for the next 5 years? Is that where you'll be?
Yeah, probably, because I think the chips.
What do you see as that sector?
I think they're the real driver of it is the chips. But the other thing is I think it's advancing so quickly. There'll probably be some new technology that I don't even know about now that will be, the stuff is going so fast that, it's hard to know what's going to come next. I mean, the big thing now that's getting talked about that I've been following is these AI agents trading amongst themselves and using stable coins as the transaction medium to do it. And, there's some numbers out there showing that the transaction volume from these AI agents doing transactions with themselves is going to, at some point could swamp what's done during the, during the regular, live sessions.
That's interesting. That's really interesting. So but to copper. Okay. So the broadening of the AI trade, and a lot of people think of it as the Russell, but the first part of that, which a lot of, not you, but a lot of people forget, was that it was to the energy and the infrastructure that's going to be needed to satisfy this massive power need. We just talked about the fact that now there's going to be a nuclear reactor built and there's a processing plant. A refinery built, which is amazing that we're taking those steps. Copper, things like that. Do you look at those? Do you still think it's a place that you want to be hugely long?
Yeah. I think you have to have exposure there, but I don't know. So I'm kind of one of these guys that I always want to have some exposure, but I never want to overdo it when I think because I think everything for the most part is kind of trading near its high, right? Yep. Gold is near its high. Silver is not near its high, but it's still very high. Stocks, they're off 5%, but they're at a pretty high level. Real estate has come down, but it's still pretty high. I think this year is going to be very volatile, and in these volatile years, commodities trade on leverage and crazy stuff happens in commodities. So it wouldn't shock me at all to see 10, 15, 20% pullback in copper. But I think if that happens, you have to be a buyer of it, because I think I think it's going to go much, much higher in the years ahead, because I think in general, there's going to be a structural deficit of copper. But I also think, with the geopolitical angle of how the world is trending, I don't think supply chains are going to flow as smoothly as they used to. And so I see, you've already got, I think, a potential supply deficit. And then when you get supply chain disruption, you could see, copper trade much higher. The other thing that I think we could start to see happening, and I think that we will see happening, is I think this is all kind of related, but I think this era of globalization and one supply chain and one price are kind of in the rearview mirror and going further behind. And what I mean by that is we're going to have more than one supply chain. And with having more than one supply chain, we may have more than one price of copper. There may be a different price of copper in Asia than there is in North America or South America. I don't know exactly how this is going to play out, but I could see that happening.
Sure.
And you're already starting to see that a little bit in precious metals, right? the premium for silver and gold in China is higher than it is in the United States. It wouldn't shock me at all to see that in something like copper.
Okay, so yesterday I casually saw the head. Oh, first of all, I'll tell a quick little anecdote. It was the beginning of this year, and my accountant, I was talking about selling a property, and we're talking about how to handle the capital gains. He's like, well, can't you just sell something to have a capital loss? I'm like, it's the beginning of 2026. Nobody has any capital losses on anything. You know what I mean? What would I have been long over the last few years that hasn't gone up? Because it was a liquidity trade. But anyway, what I was going to say about the Apple headline that flashed across, like now they currently make 25% of their iPhones in India. Now, I don't know where the baseline was in that, if it's a huge story, because to me, I didn't do any research on it, but it caught my eye as being a relatively big story. Do you know anything about it, either of you guys? I'll start with you, Brent. Is that a big story that India has 25% now?
I think I wasn't aware of that, but what I would say is I think that is probably an attempt to break up the BRICS. If it's moving from Asia and it's going to India, and India trying to keep India more aligned with the United States than China, that's how I would see that. So from that perspective, from a geopolitical perspective, I think it's a big deal. Yeah,
it seemed to me too. Bobby, do you know much about it or no?
No, I know that they had committed to that. That was one of the things they committed to.
Yeah, but did it jump up from 24% or from 5%? You know what I mean?
I mean, I know this is probably not possible, but I don't understand why the focus isn't India as a stopping point and then continue to move toward the US. I know they can't make iPhones in the US. They'd be $5,000 if they tried to make it. And I may be wrong about that. We have people that watch this show who might be yelling into the screen right now saying, no, we can actually make them here if X, Y, and Z is done.
You don't have to give a robot a pension.
Yeah. I mean, it leads me to sort of the last thing that I want to ask, Jimmy. If every couple of years there's a new word that people just start using because it's repeated so much. And right now it's affordability, right? What do you guys think the administration is going to do to pretend to address affordability before the midterms? And what should they do?
Brent, you go first.
So I don't know if they're going to be able to address that in a healthy way before the midterms. But what I think they're going to do is what they've said they're already going to do. And I think the way that they're going to try to address affordability is try to get people better jobs, right? And I think they're doing that through trying to bring manufacturing and industry back to the United States. And while I agree that is going to be very hard to do, and while I agree that will probably lead to prices being higher in a general sense, if you're making more money, then the higher prices may not be as big a deal. And I do think that this will work, not that it will work well, but I think it will work better than many people expect it to work. I think foreign companies will build plants in the United States. I think manufacturing will come back. And one of the points that you just made, Jim, although I don't know if you made it for this reason, was that when people say it will take 10 or 15 years to bring manufacturing back to the United States, my belief is that when they say that, they're thinking of the way manufacturing has been done for the last 20, 30, 40 years. I don't think manufacturing in the next 20, 30 years is going to look like manufacturing in the last 20 or 30 years. And with new technologies that come on, whether it's, the robots doing it, whether it's 3D printing, whether it's other innovations that happen, I think the United States is still the most innovative place in the world. And I think, with different incentives put in place, both from outsiders bringing their capital in and doing things internally in the United States to incentivize things being built here, I think it will happen.
So, Bobby, my answer to that question is, the affordability crisis is real. We've talked about it for several years. It's a K-shaped economy. The people who didn't own assets were completely left out. People like us have done great over the last few years. By the way, I've been complaining about the system the whole time, but doesn't mean I won't take advantage of it, because of course I will. But now it's a framing issue. And the Democrats have always been better about communicating and framing. The Republicans have not. So I do think the public, a large part of the public, is blaming Trump and the Trump administration for the affordability issue. And I think he deserves about 15 to 20% of the blame, credit, whatever you want to call it. But I do think we're seeing things like Mandami. We're seeing things like the law that was passed yesterday. We're seeing pushback against the status quo that's really, really troubling to me. I do think he'll lose the midterms, and I think it will put a little bit of a thorn into the plans that he has. Brent, did I say anything dumb there, or do you agree?
No, I tend to agree. And when he first got elected, one of the points I made was as long as he goes 100 miles an hour and doesn't stop, he's probably going to be okay because he has the mandate. But if he stops, they're going to eat him alive. Right.
Right.
And so I feel like last year, when he was putting the pressure on and moving forward, I think he had a lot of support, even though markets were down. And I feel like when he tried to soften the blow, I didn't disagree with him softening the blow, but to the extent that he softened it, I think he softened it too much and he took the pressure off. And that's when I think he's starting to get eaten. Right. Yep. I'm not sure how I think the midterms are a toss up, to be honest. And part of the reason is not because I think people are loving what Trump's doing, although I think he has more support than is generally appreciated. But I think the other reason, though, is I think the Democrats, I think they are so out of touch with reality that I don't think that they can put together a good candidate, a good, whatever a program or a message. They need to come up with a new message other than just Trump sucks, right?
There's only one message in Illinois. I see the commercials every 10 minutes if you turn on the regular TV. And I'm sorry, you apologize for talking over people. And I realize we do that on the show all the time. And you made me feel small for always doing it. But that is their only message in Illinois in the Democratic primaries is I hate Trump more than you hate Trump. It's unbelievable to me. But anyway, please.
And I don't think that works. It hasn't worked in the national elections. Maybe it will work this time. But it hasn't historically worked.
Yeah. It works in the primaries. Bobby, got any last words?
There's a comment here by Dougal or Doogie. I think it's Doogie. Luis, if you put that up, this will be my last one. I do have a little comment, but I'm going to read this instead. Isn't it the overspending like COVID that caused a lack of affordability? So isn't the big, beautiful spending and war going to do the same? It's Doug. He just corrected me. And that's actually what I wanted to say. Blaming Trump for where prices are versus wages, at least as of the last couple of pieces of data, wages were starting to surpass the pace of inflation. But like blaming Trump for where prices are is like blaming your last meal on the 50 pounds you gained. You shouldn't be eating another pizza, but it was all those other pizzas piled on. It's not this one pizza for the 50 pounds.
I think that's pretty well said. And I think that Trump has been a hugely profligate spender too, but he is a bit of a deregulator and a tax cutter, which, by the way, yes, in a situation like this, probably will raise revenues, not lower them when you're taxing people at 45 to 50% in the upper middle class. So I do think Trump is disappointing that way. But again, his plan was always to grow our way out of any sort of potential bond problem. And I don't know that it'll be successful, but I think he has a better shot than the other side. Is that fair?
Yeah, I think that's fair.
Yeah, I think that's fair.
All right, let's cut it at that. Brent, where can the people find you? Everyone knows where to find you, but tell them anyway.
So if you go to santiagocapital.com, that's our home website, and there's lots of different links there where you can, find various things that we're working on. If you go to research.santiagocapital.com, then there's a couple different levels of research that we put out. And then I'm very, as you know, very active on Twitter. It's my favorite way to interact with the public. So it's the handle is Santiago AU Fund, and it's a white seashell. So love to interact with you there.
Yeah, thank you guys. Thank you, Widge. Thank you, Remo. Thank you, Dougie, for interacting today. I love it too. That's my favorite part of this show is the fact that it's alive and you guys can comment as you do. And by the way, our guys are a lot of the people who watch the show are a shit ton smarter than we are. So we don't call them our fans. We're fans of them more than them fans of us. But thank you guys very much for watching. This has been the Trader's Edge. Please join Bobby and I with Mike Arnold at unfilteredinvestor.com. We'd appreciate that as well. This has been the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.